right, strap yourselves in for today's deep dive. We're going right into the wild world of fintech. We're talking SoFi Technologies, SoFi on the ticker. And you know what? You guys sent in this analyst report. That's got me kind of confused, to be honest.
Oh, yeah.
See, SoFi's been putting these crazy impressive numbers, right? But this report is saying to be cautiously optimistic, even setting a fair value target. Below the current stock price. It's trading at $15.84. But they're saying it's only worth $11.75.
Interesting.
Something just doesn't quite add up.
Yeah. What's really interesting is that contrast between their recent performance and then how the market is valuing them. Let's not forget, they just finished 2024 with record adjusted net revenue. It's like we're talking $739 million just in Q4 alone, and a huge $2.6 billion for the whole year.
Right.
They're not just growing, they're profitable. 5 quarters in a row they've been in the green, and they even hit debt profitability for the full year.
Yeah, I saw those numbers. $7.2 billion in loans, $198 million in adjusted EBITDA, and their member count exploded to over 10 million, a 34% jump year over year. We'd think Wall Street would be ecstatic.
Right.
But this report is not quite so sure.
Yeah, and it seems like there are a few key concerns holding them back. It's not just about hitting impressive numbers, you know? It's
Right.
about, can they build a sustainable business for the long term? And one of the things I pointed out was their credit card business is still operating at a loss.
Okay, so one piece of the puzzle isn't profitable yet. I mean, that makes sense, I guess, but is that really like a...
Deal breaker? Well, it depends. You know, SoFi is really reliant on lending, which makes them susceptible to like interest rate fluctuations and, you know, and the overall health of the economy. It's kind of like, you know, building a house on stilts. If the water level rises too high, you're going to be in trouble. And the report highlighted that challenge with attracting deposits, keeping those deposits, especially because, you know, interest rates, they're supposed to stay high.
So are they like drowning in potential risks here?
Well, not necessarily. I mean, they are aiming to be the top, like digital one-stop shop for all things financial services. This report dug into their strategy and what they think sets them apart.
Right, their so-called moat or competitive advantage.
Exactly.
I saw they're betting big on technological innovation to make products faster. They're also putting a lot of resources into their brand, partnering with big names like TGL.
Yeah.
Are those efforts really working?
It's too early to tell, for sure. I think what's more interesting to me is this thing they're calling the financial services productivity loop, which is basically using their current members to try and drive adoption of their new product.
So they're trying to build a system where success just breeds more success.
Exactly.
That's a bold move.
Yeah.
But does that kind of strategy actually work? Have we seen this before?
Oh, yeah, for sure. Think about companies like Amazon. They started with just books, and now they sell like everything. The key is you have to have a core offering that's good enough to get people in the door. And then once they're engaged, you introduce them to all the other things.
So SoFi's trying to become the Amazon of finance. Now, that's a vision. But are they just rolling out these shiny new features, or are these innovations actually game-changing?
Well, they've launched this SoFi Plus thing. It's a premium membership, some interesting perks. And they're also expanding access to alternative investments.
Okay. Alternative investments. Like, what are we talking
We're even giving members a chance to invest in SpaceX.
SpaceX. Whoa.
Yeah.
That's like straight out of a sci-fi movie. Are these moves just for headlines, though? Or are they, like, actually a good idea?
It's a bit of both. It is smart to diversify what they offer, to appeal to more investors.
Right.
But they can't spread themselves too thin. It's a tough balance.
Right. Especially when you consider the risks. We talked about interest rates, but this report also mentioned competition.
Oh, yeah, for sure. So SoFi isn't playing in an empty sandbox here.
Yeah.
They're up against these huge financial giants and a bunch of scrappy little startups, too. It's a tough market. You got to constantly innovate to stay ahead.
And we can't forget about the earnings call. Investors were worried about deposit growth, especially with interest rates on the rise. Did SoFi have anything to say about that?
They did. They said they're committed to having a bunch of different funding sources.
Okay, makes sense.
And they said they've got good relationships with their partners.
Yeah.
And that they're going to keep focusing on building their brand and marketing.
So they're not panicking, but they're taking it seriously.
Exactly.
What about their earnings guidance for the medium term? Investors didn't seem so sure.
Yeah, about them hitting those targets, especially with all this investment going on. Did SoFi address that? They did. They said they're still confident in their long-term margin targets, which are 30% for EBITDA and 20% for net income. and that they're committed to growth, even if it means a little less profit in the short term.
So basically they're saying, trust us, the profits are coming.
Yeah, basically.
That's a hard sell for investors that want returns now.
It is. It's that classic debate, growth versus profitability.
Right. So File thinks investing a lot now will pay off later.
Yeah.
It's risky, but could have a big reward.
For sure.
Speaking of risk, investors were also worried about their loan business, with interest rates being so volatile. And they were curious about SoFi Invest. Their brokerage platform is not making much money right now. Did SoFi respond to those concerns?
They did for their loan business. They said they have a lot of different ways to make money and that they know how much demand there is for loans in the future. They also pointed to their agreements with their partners and their ability to change when the market changes.
So they're saying, we're flexible, we can handle this.
Exactly.
What about SoFi Invest?
They talked about building brand awareness with new and existing members and improving the platform with new features and more investment options.
So they're betting on
attracting
more users.
Yes.
And keeping them happy.
With a better platform.
Makes sense. Anything else about SoFi Invest in the report?
Oh, there was one more thing.
Okay. What's that?
They mentioned maybe going back into crypto.
Crypto? Wait a minute. They're going back into crypto?
Well, they said it depends on regulations. If things become more clear, they might jump back in.
Crypto? That's a whole other can of worms.
Right. They have to be careful.
Aren't they worried about how volatile it is?
They are. They said they're going to be really careful, but they see the potential, and they want to be ready if the time is right.
Okay, so they're like dipping their toes back in?
Yeah.
But not jumping in head first?
Yeah.
That seems smart.
Okay.
So let's take a step back and look at what all the analysts are saying. This report has a bunch of different price targets. Some are high, some are low. Why are they all so different?
Well, some analysts are really optimistic. They see SoFi's growth and how fast they're getting new members, and they think the productivity loop is going to be huge. They also like all the new products and the partnerships.
So they're all in on the SoFi train.
Pretty much.
But everyone agrees, right?
Nope. Some are worried about the risks, especially with all the lending, and how interest rates might change. They're also worried about competition. And SoFi having to spend so much money to keep growing.
So it's the classic bulls versus bears.
Exactly. Optimism versus caution.
So what's the average price target?
Over the last 6 months, it's been around $11.42.
That's still lower than the current stock price, which is $15.84. Looks like the market is more optimistic than the analysts.
A little bit.
But we know better than to just follow the crowd, right?
For sure. Analyst ratings are helpful, but they're just opinions. Even experts get it wrong sometimes.
That's good advice. So we've talked about SoFi's performance, their growth strategy, the risks, and what the analysts think. We've covered a lot. But I feel like there's still more to unpack. What's next?
Yeah.
Well, we keep coming back to this question of valuation.
Yeah.
The market seems to be pretty optimistic, but this report is setting a lower target. So how do we make sense of that?
Well, we have to look beyond just the numbers and really try to understand the analysis behind them. This report gives us the...
Okay, so let's pretend we're analysts for a minute.
Okay.
What's really driving those price targets?
For the bulls, it's all about growth. They love those revenue numbers and how fast SoFi is getting new members. And they think that productivity loop is going to be huge. They think it's going to drive growth for a long time.
So they're totally buying into the SoFi story.
Pretty much.
But what about the bears? Why are they so hesitant?
Well, they're focused on the risks. They're worried about SoFi relying so much on lending, especially with interest rates being so unpredictable. They're also worried about the competition and SoFi having to spend so much to keep growing.
So it comes down to risk versus reward.
Exactly.
The bulls think the rewards are bigger than the risks, and the bears are more cautious.
Makes sense.
But how do we, as regular investors, make a decision?
That's the big question. And there's no easy answer. It depends on what you think about SoFi, how much risk you're willing to take, and what your goals are. Do you believe in their plan? Are you okay with the level of risk?
So we can't just trust the analysts or the market. We have to do our own research and make our own decisions.
Exactly.
Wow. This deep dive has been really eye-opening. We started out kind of confused, but now we have a much better understanding of SoFi, both the good and the bad.
Investing is a journey, not a destination. There's always more to learn.
That's so true. And we'll be here to help you every step of the way.
If you enjoyed this deep dive and you want to stay ahead of the game, be sure to subscribe to the channel and hit that bell icon.
We'll be back with more deep dives into all sorts of interesting topics to help you make smarter investment decisions.
Until next time, happy investing.